Hey guys, thanks for checking in. In this video, we're going to go over Oracle, which has been selling off for quite some time now and coming up on a very critical support point. We can see that it is seeing a bounce today, but it's the first bounce that it's seen in a very long time. So it's one that we have to be slow to trust, and we have to dive into its fundamentals to see if the company is worth buying. So Oracle is a household name. It's not a strange name to anybody, really. It's been around for a very long time, and the company has remained relevant for a very long time. They are a part of the internet. They are almost part of the foundation, part of the bedrock, which means that they're an essential company as long as the internet is around and as long as there's no severe overtake by some kind of competitor. Um, with that being said, Oracle has remained relevant by adapting to the times, and in the most recent times, they are trying to stay relevant by adapting to AI, which they are spending a lot of money to get there. You can see that they are one of the few large hyperscalers that are operating with negative free cash flow, and they are deeply in debt. So when we're looking at their long-term debt, they have a lot of liabilities, and investors are not too happy about that. At first, during the AI rally, that was the general rally for all the AI stocks and tech stocks. Investors were happy to see companies spending a lot of money on AI infrastructure. It was seen as a good thing. But now it's almost like they've taken a different tone coming into 2026. And it really happened about 3 to 4 months ago when these companies started spending so much money on AI, including Meta, by the way. Oracle is not the only one here, that it kind of made investors concerned about, is this going to be money that you're going to eventually see a return on investment? You're taking on a lot of debt. Are we going to have to downgrade your debt credibility? And so that was a lot of pressure. But now this company has been cut in half, and it's down from $1 trillion in market cap to under 500 billion, trading at a price to earnings ratio of 25. This is the cheapest it's been in a very long time, despite the fact that it's the best it's performed in a very long time. So, no matter what the media says, no matter how much pressure there is on the stock, as a business, Oracle is still performing really well. You can see their net margin last quarter was 38%, which is stunning. So, with strong net margins, although the company's taking on a lot of debt, strong net margins allows them to produce free cash flow eventually. Moreover, there is a pathway to a lot of revenue. Oracle's backlog consists of $520 billion. So that means the company has a clear pathway to more revenue ahead of them that's going to pay down their debt as long as they're able to deliver. And one thing we know is that Oracle has been delivering for a very long time because they have been around for a very long time. So they have the moat to spend. Balance sheet is healthy. Free cash flow is really where they need to improve the business, and they need to provide investors with a return on investment timeline on their AI initiatives. Now, in terms of the chart itself, we can see that the stock is trading deeply below its 200-day moving average, which is this dark gray line. This is the line that we're referring to because it's the longest line, and it's the smoothest. So it's gonna be Oracle's average price over the last 200 days has been $220. And right now you can see that investors have not been willing to pay that $220 that they have been willing to pay over the last 200 days. That is an opportunity for an investor that believes in this company. At $450 billion, this is the cheapest it's been in a very long time. In fact, it's as close to its one-year lows as possible. However, with a company like this, where sentiment still appears weak, you can see that although the stock is bouncing today, it's still trading below all of its important moving averages. So, with that being said, it could be bouncing because the overall market is bouncing because it's trading near that one-year low. So, I would be slow to trust it. It may take one, two, or three more earnings cycles before investors start buying the name again. This is a name that is extremely it's a solid name with short-term headwinds. So it's one to take on slowly and determine whether to add to in future earnings reports. If Oracle begins to show a return on investment from all their AI initiatives, that could be a very good sign, and it may skyrocket back to that all-time high mark, especially if the AI boom comes back, which is expected to, considering the fact that Nvidia, like the names like Nvidia and Broadcom, these companies are only beginning to ramp up revenue. You can see that between 2025 to 2028, revenue is still expected to double. So although part of the AI bubble popped already, there's still a lot of money to be made for these hyperscalers and these guys spending a lot of money to build these data centers, because cloud data centers are going to generate a ton of revenue. Oracle is in the front lines for that because they're trying to become the biggest player in the game.